Ladies and gentlemen, welcome back to the channel. AMC stock is down about 4.88%. What's going on today in our markets that you need to know? And why is AMC stock down? We're going to get into that here in this video and much more. So hit that like button and subscribe to the channel. Let me know what you think down below in the comment section. Are you buying, holding, or selling AMC stock? Are you diversifying your portfolio? What names are you buying? Let me know all of that information down below. Don't share that, or share that information. Don't keep that information a secret because other people want to make money too. So first things first, I will say GME is down 9.28% today. That's obviously having a negative downward effect on AMC stock. There's really nothing specific happening with GME or AMC as far as company specific news. Just the fact that we've been rallying for a while, just basically vertical straight up for GME at least. And it has started to have a positive impact on AMC stock as well. But now you're just seeing that, sell off, which you typically do. And that is also affecting AMC, even though AMC did not rally to the same extent, nearly the same extent as GME. Now, AMC stock is at $6.82 per share. And we are going to get a big catalyst or two coming out tomorrow. Now, let's go over some of the data that did come out today. So we'll look at the data first, but this is pretty interesting. So U.S. crude oil falls more than 2% as skepticism mounts over OPEC plus cuts. Pretty interesting. That should be, a little bit of good news. Now you're only down about 1.5%, but still oil has been falling so much recently. That's positive. Now 10-year treasury yields are up about 6.5 basis points today. Let's look at the odds of Fed policy, what markets are now pricing in for the next Fed meetings. Give this one a whirl, let it refresh here. So for March, pretty similar. 42.1% chance of a cut, 53.2% chance of a pause. May, you're still pricing in the first rate cut as the highest probability of 48.7%. There's still a greater chance that we have 2 rate cuts by May rather than a continued pause by May. So that's pretty dang interesting. Kind of right around the corner. If you think about it, March is going to be here pretty dang quickly. The time just keeps on going. Now, let's take a look at the data that came out today because obviously that's caused by the data. Give this a second to update as well, just so we know we have the most up-to-date numbers here. So, core PC price index month over month came in at 0.2% in line with estimates. Personal income 0.2% in line with estimates. Personal spending month over month 0.2 in line with the estimates. PC price index month over month came in at 0%, just as I expected it would. And PC price index year over year came in at 3%. This was actually good news across the board. Like, very good news. That could be why bond yields are going higher by about 6.5 basis points because markets are saying, hey, it doesn't look like the economy is heading into a recession. And it looks like inflation's coming down. So maybe without that recession, we don't get as many rate cuts. Maybe that's why 10-year treasury yields are going higher today. You also did get some pretty hawkish commentary from some of the Fed officials today. I guess you could say that was not as great. Now, pending home sales were down 1.5% month over month for October. And pending home sales year over year were down 8.5%. Some pretty rough numbers there, but all things considering mortgage yields are 8%, right? Mortgage rates are 8%. Kind of crazy. I think now they're like 7.25% because treasuries have come down, but still they are way too freaking high. Now, coming out tomorrow, you're going to have some data. The ISM manufacturing PMI for November will come out at 10 o'clock in the morning. You're expecting 47.6. Anything under 50 is contractionary, so I'm not expecting any kind of huge, beat to the upside there, but anything is possible nonetheless. Now, the big catalyst for tomorrow is going to be Fed Chair Powell. He'll speak at 11 o'clock in the morning tomorrow. So we're going to have some time to react to all of this and kind of get a feel for how the markets are going to react to anything he says. I'm not sure if he is going to take questions or not, or if we're just going to get a statement or what exactly it is, but it is highlighted in red, expected to be a major volatility catalyst. The big thing we want to watch is right now we're seeing a lot of Fed officials that are for rate cuts. They're saying, hey, if inflation continues to fall, we could start cutting rates, 5.5% for Fed funds rates, a little bit too high if inflation's coming down. And then you have some officials saying, no, we might have to raise rates again. So what does Powell think? Now, he's probably going to be more on the hawkish side, but you never know. We're heading into 2024 now. It's an election year. He's going to have a lot of pressure to cut rates. That's obvious. So we'll see. Whatever Powell says coming tomorrow will be important. Tomorrow is December 1st as well. So definitely getting into the holiday season here. The percentage of stocks today above the 50-day moving average is sitting at 66.92%. So this number continues to slowly trend to the upside. Remember, back in July, you were at a high of about 77% of stocks above their 50-day moving average. So I think personally the markets have more of a rally to go. Just think about this logically, back in the summertime, the markets were rallying on AI, really hopium at that. No companies really seeing substantial earnings from AI besides NVIDIA right now. But now markets have started to rally because rates are actually coming down. The markets are projecting 5 rate cuts for 2024. I think that is a much sounder of a reason for stocks to be moving higher right now. I think the rally makes sense, and I think there can be more of a rally for sure. Look at all the money on the sidelines. There's $6 trillion in money market funds. There's trillions of dollars in cash and in the sidelines in treasuries. There's a lot of money that is going to make its way back into our markets over time. Now let's take a look at the Ortex data here for AMC stock. Let's take a look at the option activity. First things first, you have seen 3 orders totaling $179,000 today with a positive order value of 34%. 34% might sound bad, but that's the average over the last week. Over the last week for AMC, you have had 19 orders totaling $1.68 million with a positive order value of 35%. So roughly in line with the average that we have seen over the past week. So not a terrible day today, believe it or not. Now, 3 trades in specific that are popping up. A January 19, 2024 $14 put for $105,000. A December 8th $750 call worth $61,000. And a December 22nd $6 put worth $13,000. So pretty sizable call here. Pretty sizable put as well. We'll have to see. Now, if you're looking at the entirety of today's option activity, and out of 100% of volume, 86.4% of the volume is to the call side, 13.6% of the volume is to the put side. So there are actually a lot of people, a lot of retail investors that are pretty dang bullish today, and that just continues to be the case. Now, cost to borrow average at 1.8%, cost to borrow max at 1.04%, cost to borrow I say cost to borrow average at 1.8%, cost to borrow minimum 1.04%, cost to borrow max at 7.26%. Now, you do have a short interest of free float at 10.75%. I should say as well, I don't believe these numbers, so come to your own conclusions. I just read them because these are the numbers that we have available to us. But by me reading them, no way, shape, or form am I endorsing I think these numbers are correct or accurate. I personally don't. That's why I'm long in AMC. I wouldn't be long in AMC if I believe these numbers. So that's just my opinion. Now, you have $152.37 million worth of short positions in AMC stock currently. Days to cover 0.92, 21.25 million shares that are currently sold short. Shares out on loan 15.72 million. Cost to borrow 1.2%, utilization of 36.91%, and a short score of 58.23 out of 100. So not the most impressive data, but not the worst data at the same time. Now let's take a look at GME and let's see what their data looks like, because GME is something we want to watch pretty carefully. If GME does do well, then odds are AMC is probably going to do well also. Taking a look at their option activity today, 5 orders totaling $317,000 with a positive order value of 57%. Yesterday's option activity was very impressive. You had 82 orders totaling $10.14 million with a positive order value of 73%. An overview of the volume today. 69.19% of the volume to the call side, 30.81% of the volume to the put side. So a lot of people that are excited about GameStop as well today. Cost to borrow average 12.9%, cost to borrow minimum at 1.9%, cost to borrow max at 19.21%. You are seeing the dollar amount sold short spiking and the short interest spiking as well from 21.5% now to 22.57%. So an increase of about 1% for the total short interest. $979.32 million worth of short positions currently in GME. 13.53 days to cover. 60.27 million shares that are currently sold short. Shares out on loan, 76.54 million. Cost to borrow, 1.93%. Utilization of 90.03%. And a short score of 84.67 out of 100. So GME's numbers look a little bit more attractive than AMC. But again, I don't believe these numbers are accurate. Now, I have got a lot of people that have commented on whether or not this rule change has went into effect, and from my knowledge this rule change has went into effect where we should start to get aggregate data on short positions, more specific data on short positions. We should know who's short, we should know how long they've been short, what kind of collaterals used, who is facilitating that trade, you know, all of that information that we've just never got before. We should start to get that. I think the rule change has went into effect now, but we're not going to get that data for probably 30 or 60 days after. It's going to take a while to aggregate the data, to post it to a new website, presumably for FINRA, right? So it's going to take a while. The government doesn't move quickly with these things. This has been up for debate as a rule change since 2021, and it just now went through. We're almost in 2024. So it's going to take a while, but eventually we will get the data, and I do think that's a reason why the hedge funds and institutions have been hiding those short positions. As simple as that. They've been hiding short positions, in my personal opinion. But I do think this rule change has actually went into effect now, but it's just going to take some time to actually get reflected. Now, we do have some earnings today in after hours as well. Let's see. Not exactly what I wanted to pull up. Let's see. So, earnings for after hours today. I know a couple off the top of my head, but I don't want to just guess all of them. Marvel, Ulta Beauty, UiPath, Dell, Ambarella, Samsara, PagerDuty, Domo, Elastic, and Tilly's that report earnings today in after hours. BMO and Gensco report earnings Friday in pre-market. So earnings season is basically done after this week. This week was a pretty eventful week for some certain sectors. Couple big stocks that report. I'm specifically excited for UiPath. I think that could see an upside move. Marvel as well. Ulta Beauty's an interesting one, and Ambarella is another one that is pretty interesting. Last earnings for Marvel, though, we turned $395 into $5,000 on calls. So we'll see. I have a feeling that one's actually going to fall, but obviously I'm not a financial advisor. I'm not a fortune teller. We'll have to see how that one does go. But nonetheless, guys, if you're looking at AMC, it's down 5.58% today. The RSI at 35.06 on the oversold side. And the MACD as well is really just going sideways at this point. So let me know what you guys think about all of this information down below in the comment section. Hit the like button and subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.